Let's talk about an inverted yield curve. What does it mean? What does that language actually mean in the investment world? Let's find out. All of that coming back. Stay tuned. Welcome back, guys. How you guys are doing out there? And today we are going to be explaining about what a yield curve is as far as to an inverted yield curve. What the heck does that mean when you actually hear it or you read it on the newspaper and you don't know exactly what that means when you read that? So I'm going to help you guys try to understand what an inverted yield curve is and what it actually represents and how does that affect the market in the future. So let's take a closer look at this first. Okay, so an inverted yield curve is, I'm going to explain this in the most simplest way as possible. It's basically investors run to treasury bonds and stuff like that for long-term investments, so this way they can get the most out of their money. So for an example, someone may run and get a 10-year treasury bond, which would be better for them than actually buying a short-term bond, like a 2-year bond, treasury bond, because they'll get more at the end. So therefore, there's a difference between interest rate on those two bonds. So there's a difference between that. But here is where the yield curve comes into play when we're looking at an inverted yield curve. So you have a treasury bond that has 10 years on the market. It's going to run 10 years on the market. And it happens to be that it's worth less than a 2-year treasury bond. Now that is a big problem when you have a treasury bond that you're going to hold on for 10 years and it's worth basically less than a 2-year treasury bond. So therefore, this is what we call in the market an inverted yield curve. So when you see that or you hear that terminology, you already know that that means that the higher treasury bonds are paying less than the lower treasury bonds. And that is not a good thing. It happens to be that in the United States right now, the Federals also has put out a warning that by July of 2020, they might be looking at a recession. Now, this is not 100% solid. This is not 100% for sure, but this is what they are talking about and going with so far for right now. Now, with the trade wars coming into play and the trade wars, this has caused the market to fluctuate very much. When I mean a lot, we have seen the market lose one of their biggest hit this week here just passed, one of their biggest hits in over 18 years. It's one of their biggest hits that the market got, and it's not going to look any better for the market moving forward. Now, the president has actually put a pause on over 300 billion goods from Chinese coming over from putting a 10% tariff tax on that 3 billion goods due to Christmas holiday and stuff like that. So basically, the president did say that the consumer would not be paying for these tariffs, that it would be China that would be paying for these tariffs, but then yet has had to double back to actually put a pause on 300 billion goods from China because it's going to affect you guys. There is no way in hell that you guys are not going to be paying for these tariffs. So if you had a delusion in your mind and you thought that, you know what, that's not true, he's on our side, this is not going to happen, this has nothing to do with who's on whose side. This basically has to do with economics, and economics is on no one's side. Is either you're rich or you're poor or you're in the middle. That's basically what it is. It doesn't discriminate. So don't go ahead and believe what you hear or the hype when in reality these things are happening. Now, I was one of the very first ones that came out and said that we're going to be looking at a recession, and I called it out very early before anyone else would done it, but because the media does not want to cause chaos in the community, they are not actually putting it out there for you guys. They're not telling you guys that there is a recession coming, that there is no way that you can try to divert and make a redirection somewhere else and get away with it. There is no way out of this. All right. The numbers don't lie. And if we continue going in this rabbit hole, the way we're going down this hole, we're going to see that we are only going to go and hit this recession quicker than possible. Now, I'm calling for September of 2020. The feds are calling for July of 2020. So we'll see which way this swings more or less. It will be fun to watch this. Now, this is a great opportunity for a lot of my young viewers out there and some of my old viewers out there to start saving up your money. I'm telling you guys, save up your money. Don't buy no stocks right now. Don't go crazy buying anything. If you need to hedge, you can hedge, but it's not important right now at this point in time, because when this recession hits, it's going to be, what I say, it's going to be fantastic in the sense that you can actually capitalize on it and get as much as you can from it. So when we do pop out of this, it will be only good in your favor. It's one of the most crucialest things that you guys can do right now is to watch the market very closely, save your money as much as you can, because when the recession does come in, you want to be ready for it. You want to be ready and know, because recessions do not end within a week. Recessions do not end within a month. Some recessions can take as much as, we're going from 3 months, 6 months to even a year. And some recessions even take longer than, we're looking at 3, 5, even 10 years. So this can be a bad thing for the United States. And this can only mean even worse for whoever is going to be the new elected president to take on. Because again, now with the mess that has been put into play, you got to find someone else who can actually clean up the mess. But in the return of that, of actually cleaning up the mess, it can make even a worse mess than what it already is already. So that's a bad thing. Now, this happens to be our last episode for this year. And when I say this year, I mean this season coming in. We are going off the air for a little bit. So we won't be able to put out any more videos for you guys or anything like that. But do share these videos with your friends and families out there. Do spread the word out there that this is coming. So this way you guys can be prepared, and do, when I say do your best to save as much as you can and prepare yourself. Because when this thing hits, you want to be in a situation where you're in solid rock, not on shaky grounds. So that's the best advice I can give you guys. And again, guys, I'll see you on the next time around. Hopefully we'll be back for season 5. We don't know if we're going to come for a season 5 or not for right now. But if we do come up for a season 5, you guys will be the first ones to know. But for right now, this is our last video. And we don't know when we're going to come back for the next season. So hopefully if we do come back, you guys will know. And if we don't come back, well, it is what it is. All right, guys. But hey, it was fun. It was fantastic, actually me sharing some context with you guys and you guys actually sharing some comments with me. It's been a fun trip. I'd like to thank my 158 subscribers that I have. I'd like to thank each and every one of you guys for actually being there with me, supporting me, and actually helping me out on this journey. I'm not saying that I'm going to quit. This is not what we're saying. We're looking to see if we can get a season 5 out of this. Hopefully we can get a season 5. If so, we'll be back. But if not, then we'll try to do something else for my 158 subscribers that I got out there. So this way you guys can always stay in touch on what's going on and what the market is doing next. So again, guys, remember, more gains, more gains, more gains. Giving it your maximum effort. Peace out, guys.